Investors and traders, welcome to the channel. Today is 27th of January 2024 and it's Saturday. I hope everyone is having a great weekend. In this video, we are going to take a look at the key US financial stocks. We'll take a look at the major US banking stocks, and we will cover the ETFs such as KRE, which is a ETF for regional banking, and also we'll take a look at XLF. And as always, this video is for educational purposes only and is not a financial advice. Okay, so we'll begin by taking a look at the KRE. This is the weekly chart of this ETF, and one of the things that we have been following is this pattern ABCD, which completed a while ago, this 11th of December 2023, and what we have seen is the market actually just goes sideways, and towards the downside we were looking for a pullback right into this shaded area that we were watching for, and the 38.2% Fibonacci retracement came in around 4807, and look at the market came down as 48.43 so far, and the last couple of weeks have been actually bullish weeks. Okay, now what does it mean? So 38.2% Fibonacci retracement in strong trending markets is a pretty good support or resistance depending upon the direction the stock or the ETF or whatever commodity is moving in. So which means that this is pretty good, and also what we are looking at is the from the momentum perspective. However, it really needs to improve quite a bit because the 200-week moving average is still hovering around 55.50 level, but the 20-week moving average is actually price is higher. So we have there's a possibility if it is able to actually take out the highs of 44.46, which is the swing high, then the upper target we have is around 57 level, and then from a Fibonacci retracement perspective, the 61.8% Fibonacci retracement could actually see this stock move as high as 62.29, but we'll have to wait and see if this swing high is taken out, because then what we have is a possibility of a ABCD pattern or one-to-one price projection pattern being formed around here, which could in fact see the stock move to around 62.30, roughly around to 61.8% Fibonacci retracement, but we'll have to wait and see. And on the flip side, if we break below this 48 level, 4807, 38.2% Fibonacci retracement, it means that there is more downside. Then we have the 20-week moving average around here, and we'll have some other support levels to the more to the downside. But looks like from a momentum perspective, perhaps the financial stocks are looking quite better than what they were a year ago, for example. Okay, let's take a look at XLF. So this is the weekly chart of the Spider Select Sector Fund ETF, and here what we were watching for was this ABCD formation. Here we had labeled this, and the market had just really gone nowhere when it reached that around 37.80 level, and it's only in the last couple of weeks that we are seeing a good momentum, and now the price is moving up to the 78.6% Fibonacci retracement, and also the 38.90 is the 1.272 expansion of this BC swing that we see here. So what it means is that this could be an area where we could find some good level of resistance come in, also from the structural resistance from here, maybe another pullback, but from a momentum perspective, this XLF is looking pretty good because we have the 20-week moving average above the 200-week moving average, and in my opinion a pullback could actually be something quite healthy, and when this XLF it retraced down to about 50% back in October 2022, and what we can also see is a pattern of higher lows around here, and it's really that when financials begin to move, we have seen an accelerated move in the overall market as well, because banking is something which is fundamental to the financial system, and we are taking a look at the US financial system, so one of the biggest capital markets in the world. So that's why if there is a good momentum to the upside in the financial markets, and in my opinion it also helps the broader stock markets as well. So again, a key level that we're watching is 38.90 for this one. Now let's take a look at Goldman Sachs. So this is the weekly chart of Goldman Sachs, and what we have seen is that just a price consolidating after a fantastic move higher, pretty much like XLF, but the XLF is stronger. And here basically this is market symmetry, so equal moves, and maybe there is going to be further consolidation. Maybe it pulls back into the range, maybe it comes and touch this 345, which is the 20-week moving average. And just from a retracement perspective, the 38.2 retracement comes to this big candle breakout area around 380 to 353, or roughly speaking 350 levels. That's also possible. So this is what we are looking at in Goldman Sachs, JP Morgan. Fantastic rally in JP Morgan. It took its all-time highs, which were found back in 2021. That's something to be taken note of. And look at this fantastic trend line. You look at that from the great depths of the financial crisis. This is one of the banks that actually performed pretty well even during that crisis. And look, it's just fantastic. There have been big declines here, especially in 2020. During the COVID lows, and then the bear market of 2022, but this trend line is just totally intact. So always taking a look at the stock with this perspective in mind. And what we are looking now is that over the course of last couple of 3 weeks, or 3 weeks, the market is just really consolidating after it formed this big all-time high. Maybe the stock is taking this time to digest some of the fantastic gains it has had in the last 18 months or so, especially since look at this accelerated move from 30th of October 2023. So a pullback to 38.2% Fibonacci retracement of this swing high to low. Here we go, around 160, right to the structural highs around here. Could be pretty good actually, and maybe that is something we might see. And if we just see that in an ABCD formation, like a price moves something like this roughly, and there is some sort of a retracement. We already see this could actually be a retracement, I don't know, and then moves lower here right at 38.2%. That's gonna be a pretty good pattern to take a look at if it happens that way. Okay, now we are going to take a look at Citigroup. So this is the weekly chart of Citigroup, and here just look at this chart. It's just gone nowhere. This is probably the weakest big financial bank in the United States. Taking a look at from technical chart perspective, is just look at this chart. Big rallies, big declines, big rallies, and a big decline as well. And where the price is right now is just retraced to 38.2% Fibonacci retracement. Whereas something like JP Morgan, another really big bank, has actually made new all-time highs, and the Goldman Sachs looks pretty good as well, although it became a bank during the financial crisis in 2009. Before that, it was a securities brokerage firm, fairly aggressive in their investment banking trading side of things. Okay, so yeah, we are just watching this. It's possible that maybe it find great deal of resistance from here, and a possible double top. Look, it has done double top here and here and here and here, maybe at a smaller level here and here as well, and just moves back into the range. So yeah, this is what Citigroup seems to be doing from a technical perspective. Okay, let's take a look at Bank of America. So this is the weekly chart of Bank of America. If you guys remember, the subscribers, I had done a video about long-term cycles which are operating in the Bank of America. I'll try to put a link to it towards the end of the video. Maybe I'll try to put it in the description as well. So I think it's a good video to take a look at from an educational perspective as well. It explains in more detail these ABCDs, one-to-one price projections, which in my opinion are actually really fundamental for a cycle analysis. And it just describes that in detail, longer term weekly chart, how those are operating here in this stock. And here We have this 38.2% Fibonacci retracement come in right here around 34.50, roughly speaking 34.45. The stock did find some resistance, pull back into pretty much, came pretty close to the 38.2% Fibonacci retracement. Maybe there is a possibility that like JP Morgan we were discussing, it might actually do ABCD to the downside. If it comes right to this 38.2% Fibonacci retracement, that's going to be something pretty good to take a look at in terms of pattern formation. And where it is finding resistance is actually from this 200 week moving average, excuse me. And so something it needs to get. Maybe that's why we're seeing some consolidation here. Maybe it begins to gain more energy from here to be able to make a breakout out of it and go and challenge these highs around 38.50 level. So yeah, this looks pretty good from a technical perspective. And just like JP Morgan, although the chart is not as strong as the JP Morgan chart, but look at this trend line going from 2012 roughly 2011 December, and we have seen there have been rallies and then declines, and every time this trend line has actually held that, which means we have got higher lows, higher highs, and that's the basic definition of an upward trend. So this is what we're looking at in Bank of America, a pretty fantastic stock in my opinion. Then let's take a look at Morgan Stanley. So this is the weekly chart of Morgan Stanley, and here it found resistance right from the 78.6% retracement. Also put a double top here, and broke with a big gap down here, and there is a possibility it might actually be doing ABCD, 1-to-1 price projection, down right to this level, or at least trying to fill in a gap left from December 2021. So we're just watching this one, and if it breaks above the 78.6% Fibonacci retracement around here, then we have a different kind of a pattern formation, and it could be pretty bullish in the upside. Let's take a look at Wells Fargo. So this is the weekly chart of Wells Fargo. This one is really attempting or making its effort to get above the 51 area, which is 61.8% Fibonacci retracement. And if it's able to do that, then we could have a scenario where it's just gonna go and try to attempt the highs around the $60 per share level. So this is what we are watching in the key US stock financial stocks. We covered some indices as well, such as the XLF, the KRE, and also big US banking stocks as well. So thank you very much for watching the video. Have a great weekend, and speak to you guys soon.